Another record day for U.S. stocks, and while it's few and far between, Stephen Guilfoyle and I always have something to talk about. Hi, Sarge. Welcome to the show. Thanks for joining me.
Thanks for having me, Vaz. I'm glad to be here.
Great. Well, we're all watching the retail earnings this week, and this morning, Macy's beat estimates on the heels of store closures and job cuts. So does that paint a positive or negative news for the rest of the retailers we'll hear from this week?
Well, same store comps were good for Home Depot. Same store comps were better for Walmart. Internet sales were up 31% for Walmart. So Macy's numbers might not be all that great. Maybe they'll rely on a takeover or their real estate in order to bail them out. But the other retail signs we saw this morning weren't quite as ugly as we expected. Now, we got a long way to go this week. There's plenty more retailers on the docket. But retailers seem to be rising maybe as a group slightly above greatly lowered expectations. So yeah, you might see a little pop here. It's still not a sector I want to be overly invested in.
Mm-hmm. Are you seeing any other retail takeovers in the near future? Any you'd like to see?
Oh, what would I like to see? I would like to see Starbucks taken over by someone who's apolitical. Mm-hmm. I don't know if I should comment on too many firms that may or may not be in negotiation, but I think the price for the Yahoo deal, Verizon and Yahoo, that's not retail, but that was something that needed to be taken into consideration. I was kind of surprised that Verizon didn't seem to be taking a discount after all they've been through. I think it's very interesting that Restaurant Brands is taking over. They already own Tim Horton and they already own Burger King. Now they're getting their teeth into Popeye's Louisiana Chicken, which I think is a very interesting trade. I don't really know anything about Popeyes, but I know my kids love it. I guess that's about all the merger and acquisition space we have.
All right, yeah, they'll be happy. I'm happy about Popeyes, too. Now, also this week, we're going to be watching oil, some intriguing trade there, too. Now, while the OPEC frenemies are sticking with their deal and we have U.S. inventories on the rise, do we see oil getting to 60 soon?
Well, oil's strong today. I mean, it's above that $54 resistance level that we've seen for the last couple months. It almost threatened $55 at one point today. It didn't get that close, but it kind of got towards that. I think that's a gateway. 55 is a gateway. I've said it could go to 58 if it gets 55, but it really could get as high as 62 if it gets through the 55 level, which is very interesting. I see plenty of fundamental reasons for a decline in the price of oil. The rig count is at a 16-month high. The weekly inventory number is at a multi-decade high. There are reasons that you might want to sell off oil, but most of the street is betting on higher oil, and it seems to want to go there. Myself, I don't like the space, but I'm afraid to miss it completely. I've gotten involved in Schlumberger a little because they're best in class as far as oil services go. And I've gotten involved in a little name called Sanchez Energy, SN. It's a cheap little name. It's a spec buy, but you know what? They're buying land in the Permian from the big boys. They're either going to make it or break it. But it's a place to go where you don't have to spend that much money, and maybe down the road you get something for it.
All right, secrets from Stephen Guilfoyle. Now, alongside the rally that we're seeing in U.S. stocks, if we take a look at the world index, we're in a global rally. So where's the risk, Sarge?
Oh, my gosh. The risk is really in what has partially driven us to this point. Yes, we've seen improved growth. You saw the CPI, you saw retail sales, you've seen improved earnings, and like you said, around the globe we're seeing that. That's partially supported by all the easy money that's around the globe. But going forward, we have tremendous political risk, and we have risk within that tax plan. The tax plan that's given so many people and so many corporations confidence. Well, there is trouble within that plan. The border adjustment tax or value-added tax, let's hope it doesn't go there because that's just a consumption tax. But the border adjustment tax could raise consumer prices and could hurt importers. So it's something that a lot of the street doesn't want to see. Now, there's positives in this border adjustment tax, to be sure. It's almost a zero tax on those who export. And it could actually drive reverse tax inversion. The companies that used to leave us and find haven somewhere else might actually come to the U.S. looking for haven. So there actually is a chance it would increase manufacturing jobs, rising lower to middle class salaries. But that would be down the road and after you see the rise in consumer prices. So it's a tricky game.